Hello, my name is Jeremy Solomon. My company, Solomon Exam Prep, has helped thousands pass their securities licensing exams like the Series 7, Series 65, Series 63, Series 24, and Series 79. I'm here today to speak about the seismic change that FINRA and the securities industry launched this month, October 2018. I believe this is useful information to college and graduate students who may be interested in working in the securities industry or in fintech at companies such as Square or PayPal. What is a security? Well, I'm not going to make you wait too long. A security, the Supreme Court has said, is defined as any contract with or investment in a for-profit enterprise that depends on the efforts of others to succeed. So let's repeat that. The Supreme Court, in their Howey decision, has defined a security as any contract with or investment in a for-profit enterprise that depends on the efforts of others to succeed. Now, in terms of actual assets, financially, this includes stocks or any equity ownership in a business, bonds or any IOU like a bond, mutual funds, ETFs, exchange-traded funds, ADRs, which are foreign securities, variable annuities, even perhaps cryptocurrency, although that's not completely settled yet. If there's a guarantee, such as an FDIC-insured bank deposit, then it's probably not a security. And what that means is a defining characteristic of a security is that it is an investment in or financial contract that is insecure. So what? Well, this definition of security tells us something very important, that the risk in the securities industry is so big that the industry is heavily regulated at the federal and state levels. In the U.S., one of the main ways that securities industry risk is regulated and managed is by requiring individuals who work in the industry to pass demanding knowledge-based exams that test an understanding of the products, the markets, and the rules and regulations. These are called series exams, and they're generally followed by a number, so Series 6, Series 7, Series 65, etc. Before October 1st, 2018, you had to be employed by a registered broker-dealer, and then that broker-dealer had to sponsor you. That meant the employer, the broker-dealer, had to fill out a 40-page form called a U-4, which is essentially a huge background check, and file it with FINRA and get it approved before you, the individual, could sit for a securities licensing exam. Also, you had to get fingerprinted. For firms, for broker-dealers, this meant cost and liability because a registered person is someone they are liable for to FINRA and ultimately to the SEC. The effect is, or has been, that the securities industry was challenged because it felt that not enough young people were entering the industry. The firms felt that the barrier to entry to employment was too high. This resulted in FINRA restructuring its exam system and creating a new exam called the SIE. And this was in an effort to open the industry up to more people, especially young people. So FINRA split all entry-level exams, the Series 6, the Series 7, the Series 79, etc., and took out the basic or essential information and created a new foundational exam. This is the Securities Industry Essentials SIE exam, and from now on, you need to have the SIE in order to get licensed. The big changes with the SIE include there is no employment or sponsorship requirement. No filing of a U-4 is required, no background check, no fingerprint requirement. You just need to be 18 years old. Anyone who learns the material can take the SIE exam. However, the SIE doesn't actually license you to do anything, so why take it? Well, aside from the fact that the information on the SIE is useful to know even if you don't work in the securities industry, employers are telling us, Solomon Exam Prep, that they are looking for it on job applicants' resumes. And so it's kind of a pre-qualifier. It's definitely an advantage if you're looking for a job in the securities industry to already have the SIE exam under your belt. Who are these employers? Well, the following is a short list of some of the employers who use Solomon Exam Prep: Janus Henderson, ING, Raymond James, PNC, Voya, ProFunds, ProShares, Allstate, USAA, Wells Fargo, Harris Williams, Principal Financial, MassMutual, Invesco, Greenhill, Prudential, U.S. Bank, LPL, Emeritus, New York Life, George K. Baum, PwC, Waddell & Reed, Seed Invest, T. Rowe Price, Lincoln Investment, Ares Management, TIA, Piper Jaffray, etc. So many, many employers are going to be using the SIE. Some details about the SIE. It's a total of 85 multiple choice questions, 75 of which are scored, 10 are unscored, and those are random. We don't know, you don't know which are the unscored ones. They're questions that FINRA is trying out. It's 105 minutes long. 70% is the passing score. The price, the cost with Prometric is $60. The exam is good for 4 years. Topics include equity securities, debt securities, investment companies, life insurance products, packaged securities, options and alternative investments, risks, disclosure, and taxation, issuing securities, the primary market, the securities markets, customer accounts, prohibited activities and conduct rules, and regulatory responsibilities. Those are the broad topics. Here are a few practice questions from the Solomon Exam Prep database, just to give you an idea of what the exam questions might be like. A customer's margin account has a debit balance of $7,500. What is the greatest value of securities that may be rehypothecated from this account? A, $0, B, $3,750, C, $10,500, and D, $15,000. And C, $10,500 was the correct answer. Hypothecation is when a customer opens a margin account and pledges the margin securities as collateral for margin loans from the broker-dealer. Rehypothecation occurs when the firm, the broker-dealer, uses the customer's margin securities as collateral for additional borrowing on its own account. The maximum amount that may be rehypothecated from a customer's account is 140% of the debit balance. 140% of $7,500 is $10,500. What is the holding period for restricted securities issued by a company that does not file reports with the SEC? A, 3 months, B, 6 months, C, 9 months, and D, 12 months. And the correct answer is D, 12 months. Rule 144 requires purchasers of restricted securities to hold them for a certain amount of time before they sell them. If the issuer is a company that files reports with the SEC, the holding period is 6 months. If the issuer is a non-reporting company, the holding period is 12 months. Joe, a savvy investor, has his eye on the rapid rise of XYZ Corp stock. Analysts predict that XYZ Corp will continue to go up in price, but Joe is convinced that it will decline in value soon. Which of the following should Joe buy if he follows his convictions? A, a put option, B, a call option, C, common stock, D, rights. And the correct answer is A, a put option. Put options are the only kind of investment from the above list that go up in value when the price of the underlying asset goes down. A put option is the right to sell an asset at an agreed upon price called the strike price. If the market price declines below the strike price, the buyer of the put option can sell the asset at the strike price, profiting from the difference between the higher strike price and the lower market price. Since Joe believes the stock price is likely to go down soon, he should buy a put option on XYZ Corp shares. Which of the following is true when the economy is considered to be in a depression? A. It has been in a contraction phase for at least the past 6 quarters. B. It is in an extended trough phase of a business cycle. C. It is ready to begin an expansion phase. And D. Unemployment is at its lowest point of the business cycle. And remember, the question is, which of the following is true when the economy is considered to be in a depression? And the correct answer is A. It has been in a contraction phase for at least the past 6 quarters. A depression is defined as a contraction phase that has lasted for at least 6 quarters or 18 months. Just because the economy is in depression does not necessarily mean that the trough phase of a business cycle is at hand. The trough phase is the point where the contraction phase ends and the expansion phase begins. Additionally, keep in mind that an economic depression is no guarantee that key economic factors, such as unemployment, cannot get worse. Only when a period of expansion begins can investors be confident that such is the case. On a secure line, Ellen called a broker-dealer from her nuclear bunker. She's not crazy about giving out information, but she would like to open an account. Which of the following is not required to open a new account? A. Full name. B. Date of birth. C. Social Security number or tax ID number. And D. The customer's signature. And again, the question, which of the following is not required to open a new account? You got to always reread the question to make sure you understand what they want to know. And the correct answer is D, the customer's signature. The customer's signature is not required on the new account form. According to the Patriot Act, the full name, date of birth, and Social Security number or tax ID number is required to open an account. If the Social Security number has been applied for but not yet received, the firm may open the account, but it must obtain the Social Security number in a reasonable time frame. Which of the following results in the largest monthly annuity payment? A. Unit refund life annuity. B. Life only. C. Life with period certain. And D. Joint and last survivor. And the correct answer is B, life only. A life-only payout will be the largest since it is the only option to pay out on one individual's life. All the other option choices include payment options beyond the life of the annuitant. I think this is the last question. Julian is an MFP at dealer X, a municipal securities dealer. Julian is an MFP at dealer X, a municipal securities dealer. He contributes $225 to the re-election campaign of a Blue County official who is able to direct business toward municipal securities dealers. Since he lives just across the river in Greene County, Julian is unable to vote in the election. Which of the following is true of Julian's contribution? A. Since it is for less than $250, it will trigger a ban on doing business with municipal entities under the official's control. B. Since it is for under $250, it will not result in a ban on business with any municipal entities. C. Since Julian was unable to vote in the election, it will trigger a ban on doing business with municipal entities under the official's control. And D. It will only trigger a ban on doing business with municipal entities under the official's control if the official wins the election. And the correct answer is C. Since Julian was unable to vote in the election, it will trigger a ban on doing business with municipal entities under the official's control. MSRB Rule G37, also known as the pay-to-play rule, prohibits municipal securities dealers from engaging in certain types of business with a municipality if they have made political contributions to an official of that municipality. However, the rule comes with an exception that allows MFPs, that is, municipal finance professionals, who are allowed to vote in an election to contribute up to $250 without triggering the ban. But since Julian is unable to vote in the election in this example, his contribution does not meet the de minimis requirement. Additionally, whether an official is elected as a result of a campaign for which contributions were made is irrelevant for the purposes of the pay-to-play rule. So those are sample questions from the Solomon Exam Prep database of SIE questions. Gives you a bit of an idea of what kind of material will be covered. Thank you for listening.